and welcome to the Investor Master Series. My name is James Boyd. We welcome you on this Tuesday morning, and it's been a special morning, and we're grateful to be here. So we'd like to welcome Frank, Gary, Ray, Carol, Ricebird, and many others. We also have Barbara Armstrong in the chat. We welcome her as well. Just also remember, there are no silly questions. Feel free to go ahead and ask those questions. That's why Barb is here. Barb, as you know, is a fellow instructor, and she teaches throughout the week as well. And many of you saw her at the Chicago investor event. So it's always great to see them live and in person. So let's go ahead and get started. Now, remember, with what we discuss is done for example and illustrative and informational purposes only. When we talk about options, remember that options carry a high level of risk and are not suitable for all investors. Also, remember when we talk about using the paper money account, that is the software paper money version. And so you know that there's a web-based version and there's a downloadable software, and we're using really the software application. Also remember that investing involves risk, and also remember when we talk about investing, you should be aware of what that risk is and if that's something you would consider for yourself. Now, also, as we get going here, also quick reminder that with what we discuss, as we talk about options and option Greeks, remember that option Greeks, and let me just share that. Remember that option Greeks, quick reminder there, that when we talk about option Greeks, that we're going to talk about delta, we're going to talk about gamma, we're going to talk about vega and theta, right? And remember that those are very important to really understand what we have a sensitivity to, whether it's direction, change in delta, to time, and also volatility. Let's go ahead here and hop right into our session here today. So first off, I want to follow through on what we talked about yesterday, which is we'll take a quick look at where the market and sectors are. I wanted to talk about that yesterday, but I want to talk about that a little bit further here today. Second, what we'll do is we'll talk about some current portfolio issues. Now, they're good issues, but there's situations that happen on Friday because, as you know, Friday was expiration for options. And we need to talk about kind of where that portfolio is and talk about maybe exiting some stock position, at least some of it, okay? And so let's go ahead here, and then from there, what we'll do is we'll talk about some new positions as well, okay? So first off, let's just take a quick look at the SPX. And if we look at the SPX, what you're now going to notice is we've talked about in the last 2 Mondays, we've talked about trend reversals, okay? Last week was trend reversal week, part 1. Yesterday was trend reversal, part 2, okay? And what you're now going to notice is if we looked at this chart, you're now going to see that we had a strong day yesterday, and then today, a little follow through here so far. Now, if we were to look at this, you're going to kind of see that kind of this level, maybe 5,800 or so, is going to kind of be a key level, but we've had a pretty strong move to begin with so far, okay? Now, when we actually all right, so sorry about that. We should be good to go now. So when we talk about the SPX and the NDX, it looks very similar, okay? And if you look at the SPX and the NDX, yesterday was a big day because we actually got above the horizontal area of resistance, right? And then today, a little follow through. And notice actually how today started, right? We just kind of had a little consolidation and then started to push. Now, you got to remember something. People have been kind of talking about news, and news absolutely plays into it. News can cause technicals to change, right? For sure. And that happened on the way down. Just remember that can also happen on the way up as well, okay? So NASDAQ here, not back up to where it broke down from, but a pretty good start at that. Now, if we take a look at also the Russell, why do we care about the Russell? Well, if people are buying the small caps, this might be the extreme of maybe optimism, right? Someone buying small caps, these companies not as well capitalized, and they might really be thinking here that this area might have a higher percentage movement, okay? That's why people tend to invest in them. Russell here, pretty good pop yesterday, but you might kind of say that when you look at the SPX and the Dow, maybe a little bit better than the Russell, okay? Last but not least, what does that Dow look like? Dow, the significance, and let me ask you a question. If we looked at the Dow and then we compared it to the SPX and the NASDAQ, what's the difference? The difference that we see is kind of where we fell through the floor. So let's say that James was a bear, and I thought the market was just going to go down, 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 down. If I'm a bear, what I don't want to see, if I was a bear, hypothetically, well, I don't want to see it get above where it broke down. because when it broke down, it made me feel good that, hey, now we're getting that move that I thought. But now all of a sudden, if we start getting above, let's say 421 and change, all of a sudden, what I thought isn't playing out. Okay. So the Dow doing a better job. Now, remember, we're talking about larger cap companies. Okay. And these are companies more established. They trade global. They have their products and services globally. Okay. Not here, just in the US. And they have big balance sheets, and they've probably been around for a while and even pay dividends. And they're probably more liquid than a lot of those smaller caps. Now, I think the chart that we have to pull up that has been of interest, and you got to admit, it's kind of been a little fun. Remember, we kind of talked about this diagonal line, and that diagonal line was where bulls had momentum. And we said that, hey, if the VIX goes down below 25, hey, those bears are losing control. Now, I want to speak to those bears because I know you're out there. Now, here's the thing. You can be bearish, okay? Smart bears just got to understand when that short-term strength, short-term weakness is moving away from them. When we did see the VIX get down below 25, it's pretty much been unwinding some of that fear in the short term. Now, I know how you feel, bears. You're thinking, yeah, but my call is kind of more for intermediate to longer term. That's understandable, but you got to remember some of these short-term price rallies can be pretty violent in terms of a percentage. You got to remember that, okay? So you might be thinking, hey, I'm thinking the trend overall is going to drop in the intermediate to longer term, but just remember there can be some short-term trades back to the upside, even on some stocks that have actually been quite stronger than many other stocks. That does not mean that all stocks are upward trending. I agree with you there, and we've hit that pretty hard. But you got to understand something is most investors are long only, okay? If you ask someone who's a high school teacher, college teacher, plumber, electrician, dentist, whatever, how many of you go short? They would look at you like, I'm 5'11". Short, what do you mean short? Okay, I think I'm average height. They don't even know what you're talking about, okay? Just try to do that one time, and they won't even know what you're talking about, okay? So I know you're a bear, okay? And you've kind of sent me little emails and tweets and stuff, and there is some weakness, but I think you kind of have to look back and say, what does the market predominantly tend to do, okay? Now, if you go back and look at this, so much fear, we were at almost 30, and we've almost halved it. Now, remember, we talked about 2 weeks ago, right? Buying stock and protected puts. That's also known as married puts. So if the VIX is falling, that means the stocks on a majority basis are probably going up. That means that those positions that you practiced are probably doing okay. Okay, now don't worry, we're going to come to some positions. But the other thing is if you sold some pets, okay, or short put verticals, when that volatility falls like that, you're probably maybe saying, hey, in my paper trade accounts, kind of seeing some upward movement and volatility contraction, okay? So remember, the bull investor, they want the volatility falling down and staying low on the flow, okay? On the flow and dropping down lower, okay? Now, let's do this just real quick. Let me pull something up here, okay? Now, in the paper money account, okay, I'm going to go to this account over here, and we're looking at the IRA, okay? I can't tell you where we started. You can see where it is now, okay? Now, we've had some gains and losses, and noted, okay? Now, there's a little situation here. What's the situation? Well, remember, last Friday was expiration. What can happen on expiration? Let me see. Well, if we, for example, had some covered calls, right? If the stock closed above the short strike that we sold, well, someone could have taken those shares. Or if we had sold puts or short put verticals and the stock closed below the strike price, we could be assigned. What does that even mean? Well, when we actually pull this up, what you're now going to see is we have positions. And by the way, how would we know if we got assigned? The dead giveaway would really be in this case is if we go look at the trade price, 55, what does that mean? I mean, how many times do you buy something right at 55 flat? It's 100 flat, okay? Not very many, okay? Now, if you take a look at this, what you're going to see is the trade price was 55, and what you're now going to see is the mark is 56.52. Now we got a little help here because yesterday the stock went up. Today the stock's down a little bit. But from assignment on Friday night at midnight, it's up $152. Now, if you get assigned, you have to stay in the stock for 30 days. Is that true? Do you have to? No? Okay. If we get assigned the shares, to buy the shares of the stock, we had the sold put at 55. Okay. It then morphed into 100 shares of stock. We could right click on this, create closing order, and sell those shares. Now, guaranteed to have liquidity? No. We're going to actually go to the trade tab. We're just going to type in MO, and we're just going to double check and see what type of liquidity do we have. Well, on the MO, what you're now going to see is we got a bid-ask spread there of about a penny wide. Volume there, almost 3 million so far, 90 minutes into the trading day. So is there a market here where we could sell maybe 100 shares into? And the answer is pretty good chance. So if I right-click on that line, say I don't want 200 shares, I just want 100, okay? Create closing order, and then sell 100 of those. Now, since we didn't close this out prior to expiration, what you're going to see in this case is we can make $151. There's not a commission on the shares. And the reason why we're going to do this is we don't really have any money, okay? We need to free up some capital. Now, if you look on Altria right here, what you're going to notice is 200 shares. So if I sell 100, I'm still going to have 100, okay? It's not like we don't have any shares. Now, what I'm going to do in this case is, let me go ahead and say confirm and send, and I'm going to move that to the mid price down here. I'm going to move it to the mid price, confirm and send. And if I do that, now what you're going to see is we're going to sell those shares, not a commission for that, and send it. Now, could you say it was a little luck? Yeah, you could say it's a little luck. Take it though, okay? Now, second thing I want to look at is just real quick NVIDIA. Now, what you're now going to notice on NVIDIA, bought 100 shares of stock of NVIDIA and bought those shares at the trade price of 130. The stock is at a mark level of 120. It shows that we're down 9.99. Now, does that trade price, which was the old short put price, does that include the premium that we received? Yes or no? So let's say we got $3 to sell the put, and then we got assigned to buy the shares of stock. That trade price that I'm circling is just the short strike. So if we got hypothetically $3, that $990 loss does not include the premium that you received to sell the put. This is just looking at the shares. From where did you buy the shares to where you are now? That's what it's looking at, okay? Now, so let's say the investor said, James, this position is too big per the portfolio, and what we're going to do is we're going to sell 50 shares of stock. So this is the other thing. Could you sell all of them? Yes, we just did with Mo. Second, we're trying to. It hasn't filled yet. Second, what we could do is we could create closing order, sell, and just say, look, I just want to sell maybe 50 shares. So if we get assigned, that doesn't mean that we have to hold on to the shares. Might just decide in this case, hey, I want to sell half of them, 50 shares of the 100. Why 50? Well, it's going to get us to kind of more of an average position size. Okay, send that. Now, what you're going to do in that case is it's going to realize some of the loss that was the partial max loss on Friday. Now what I'm going to do is going to go back to the monitor and say anything else. STLD, bought it at 130. Now, let's say when we sold this put, we got $2. Okay, got $2. Well, when you get assigned the shares to buy the stock at the strike price that you sold the put on, well, now we're at 128, and the stock is showing this down $2. So STLD might even be like a break even. Okay, it doesn't necessarily mean that, oh, we've completely lost in the position. So if the option collected $2, hypothetically, and the stock is down $2, net, you're really down about zero. It's really more commission at that point. Now, if we pulled up the chart and we ask ourselves the question, does the paper money portfolio want the shares of STLD? Now, this is a question for you, okay? would you, as the investor, decide, hey, I'm going to hold on to some of the shares of STLD? Now, in answer to that question, you got to at least think there's a trend there. Do you think we have a trend? Do you think we're above support? Now, if the investor said, no, we're not in an uptrend, no, we're not above support, then they might just say, look, I'm going to sell all the shares. If they say, look, I think we have at least a trend we could work with, we're above support, the investor might say, I'm going to go back in and I'm going to sell really half the position. And that's what we're going to do. Now, I'm going to right-click on that STLD, right-click on that, trade closing order, and when we sell half, what it's doing is it's just getting us back down below the proper position size in terms of capital. Now, we could probably just sell 35 shares or so, 40 shares, okay? But just for easy math, I'm just going to say, hey, we're going to sell half the position, sell 50, okay? Now, I'm going to make sure that we got the mid price there, 128. Let's just double check the bid-ask spread. Notice that bid-ask spread is 20 cents wide. It's not as tight as MO or Altria, okay? Noted that. And what you're going to see is we're trying to put it here in the middle. Now, if we said, look, we're trying to sell in the middle here, do we think the fill is going to be instantaneously? Maybe not, okay? Doesn't have 2 million shares or 3 million shares traded like MO, 300,000. And so what I'm going to do in this case, I'm going to go confirm and send. Note the credit there. If it can sell at that price of 128, less the commission, 0, send the order. Okay, now here's the one thing we always want to remember. Do not assume since I put my order in that it's going to fill. It has to get matched to the market, to someone out there, the specialist, etc. So now we verify with own eyes, okay, did that trade fill? And what you're now going to see is we can see it there. Quantity 50, yes. We could also see in the messages right there, yeah. This gives us the chronological kind of time of the trades right there, and we could see that confirmed STLD. We also saw NVIDIA right there. The one trade that, for example, has not been filled yet is MO. If that trade does not fill in the next 2-3 minutes, we'll go back and slightly adjust that price, okay? All right. Now, let's kind of go back. So first off, we needed to talk about that, okay? So Altria, I'm just going to come in real quick and see how far we're off on this. Want to see, so we tried to sell at 56.52. The mid price is 56.49. If I knock this down just 4 pennies, okay, better chance we're going to get filled. And if I do that, sold, I had to move it down 4 pennies, and now we just have more of a standard position size. You remember when we talked about buying the shares and buying the put? Well, there's your protected put, the one we have remaining right there, okay? Now, any questions, okay? So the comment was, truth will always prevail, says, why not sell a cover call? Well, the problem is the position size is too big, okay? So to be consistent, we were trying to make it where all the positions would have a position size in terms of dollars, no more than $6,500. So if we kept 100 shares of $130 stock, like on STLD, you'd be twice the position size, okay? Now, what does that do? Well, if that stock goes down, that loss might be bigger than what you wanted. So now you've double whammied who? Yourself. The position is too big, and now the loss is probably bigger than you wanted to stick to when you started the year, okay? Now, the way I kind of look at this portfolio is, I know where we started, I know where it is. We just went through a 10% drawdown. I feel like this portfolio is still in play, considering we just went through a bearish attack, okay? And so sometimes you kind of have to learn to lose less than what the market fell down, preserve and protect capital, and then when the market swings back up, the investor still has confidence and capital. Oh, okay. Now, speaking of confidence and capital, I want to just speak to kind of some new positions for just a second, okay? Now, I want to just pull up just real quick IXE for just a moment, okay? When we look at IXE, we've kind of been talking about the energy sector. Keep an eye on that. Crude oil, okay? Crude oil, the price. We also saw gasoline price as well. They've been a little bit more bullish, okay? The energy sector has been quite strong, setting up a pretty strong bull flag or flag, okay? However you want to say it. We also did see in terms of sectors, communication, okay? The communication, $IXC, the communication sector get a push back to the upside. Now, this is kind of big because historically, we talked about communication when it was ripping to the upside. Hasn't been a whole lot to talk about because it was going down. Can anybody remind me of what are some of the stocks that are in the communication space? Now, if you said, James, I don't have an earthly idea, not an earthly idea. Don't worry. 30 seconds, you're going to find out. We're going to go scan just real quick. Scan. And what I'm going to do is just go scan all stocks. No. By industry. Let's say you said, I don't know. I don't know. I'm just being honest with you. We're going to go down to communication services, say, look, hit me up with all those, select all communication services stock. Okay. Now, up here, it just has some information. I don't even care. I'm going to see if we can't run it, and it's going to give us a whole bunch of stocks. Okay. That if we just did one criteria, such as mark only, okay, and it said, give me a stock, and notice this, if I said all communication stocks, 458 stocks. If I said, give me the stocks that are above $40, I just only typed in one criteria, and also the sector, we're down to 55. If I said, give me 60, how many more do we actually have? Scan. And we're down to 38 stocks. We didn't put in volume. We just said stock price and communications. Now, what you're now going to see in this case is if I ranked it by last and went from highest to lowest. So think of the highest price dollar stocks, the larger the market caps, stocks like Netflix, Facebook, or Meta. And you're going to see Spotify, Charter, Detroit, T-Mobile, Capital One, and so on. Now, I want to go up to the very tippy top for just a second. Let's go take a look at Netflix, okay? Now, I'm going to pull this up and I just want to take this step by step. We're going to look to do an example trade on this. We talked about diagonal resistance, guilty, okay? And we talked about yesterday how when you get these red candles, the investor is looking for the bounce. And that bounce might just be where it pulls back 1, 2, 3 red candles, only to see it hold again, signified by that green dot. And it did. On the 19th, you started to see a little bounce. Now you go back and you look at this and kind of trade inside, and then today getting a little push. So overall, this has been pretty significant on Netflix, because if I was a bear, or we were a bear, and we said, where was the technical damage done? Probably a bunch of technical damage was really done at 964. Now, we could think that. We could say, no, that's true. But we also have to kind of say at what point maybe is that starting to reverse? Well, if that price started to get above 964, that technical damage, someone bought into that. Now, you got to ask yourself, BJ, if someone's buying into the technical damage and V-patterning it back to the upside, we could say we're bearish, but someone obviously wasn't as bearish as we were hypothetically, right? Now, when we see the prices go back up like this, we're also thinking about price movement, but also volatility. Now, what we're going to do, and we talked about this, when we're in trend one, when we're in trend two, a lot of investors like dollar cost averaging. We talked about that. Married puts, we talked about that. We talked about short put verticals, short wide put verticals, long call verticals. Something that is a little delta less sensitive, perhaps, but also trying to capture something where the volatility might contract. Okay. Now, why are we not selling the put on Netflix? We need a lot more money in that account. Okay. So the strategy that we're going to focus on is the short put vertical. Okay. Now, what I'm going to do in this case is let's go back to that paper money account. Let's pull up NFLX. And what we're going to go look to do here is go trade tab. And once I go to the trade tab, what I'm now going to do is going to go to the 17th April. Now, I want to kind of caution everyone here, okay? Is it a good idea that all the option trades are in the same expiration month? Okay, probably not. So this is where the investor says, you know what, I'm gonna maybe do an April trade, but the next one I do, or the next one after that, maybe I'm gonna go out a little bit farther. Because if in the next 23 days, which is short term, drops, if it does, that's not the, we don't want all the positions in the next 23 days, whatever happens in the next 23 days. Okay. When you go all short term like that, we have no clue. There could just be bad news or something bad happen, and there's not time to recover. Okay. So we want to be cognitively aware of that. We're going to go strikes, and then what I'm going to do is all. Now, when I do all, what you're going to see is there's a whole bunch of them. Now, I just want to go look and see in this case, if I typed in there delta, okay, option theoreticals agrees, go to delta. And what I'm now going to do is if I click on this, what I'm going to do in this case is you got to understand it's a $994 stock. The bid-ask spread is not going to be probably 20 cents or narrower like we normally see. It's wider. What does that mean? Well, it probably means that this is not going to be like some short-term trading instrument of 1 to 2 days, because you got to overcome the sum of the spread. Okay, so you got to remember that. If we said, you know what, James, I'm going to sell the put at 950. Okay, and if we looked at that one, that has a delta of 31. Now remember, two meanings for delta. Okay, likelihood of the stock to close below the strike by a penny at expiration. Answer: 31% chance as of right now. Second, what's the change in the option price given a $1 change in the stock price? Actual? No. Okay. Model price? Yes. Okay. Now, what I'm going to do is we're going to sell the 950 and then buy the 940. Okay. So what we're going to do here is going to sell the 950 and 940. Now, I want to know in the chat how many of you were eyeing the communication space without us even pulling that up. Before we even pulled it up, you said, James, I saw that. How many of you actually said, James, I've been watching the communication space? Okay, good. Now, what you're going to notice is we got a $3 credit. Now, if you got about a $3 credit, $10 spread, that means you got a $3 credit, about a $7 max loss or $700 max loss. And if you take that one number, 300 divided by 698, you get what's called return on risk. Pretty good return on risk considering that this is something that expires in 23 days. Now, what I'm going to do in this case is note the commission as well, okay? And I'm going to send that order. Now, for some reason, and what I'm going to do in this case is I'm going to put this in that so we can make sure it goes through. Send that. Yeah, should go. Now, I do want to take a quick look for just a second at Meta. Not going to do Meta because we just did Netflix, but keep an eye on when we talked about I think we talked about Meta like right here. Notice when you talk about a divergence, it doesn't necessarily mean you're at the literal bottom. You're probably close. And what you're going to notice is it did go lower, but it's reversed. And it's probably a little bit higher than when we talked about it, but it did go lower after we talked about it. Note that. Meta getting a little push here as well. Let's go back and just look at just really quick on T-Mobile. Is that reversing out to the upside yet? The answer I would actually say in this case is no. Okay. And if we looked at this, what I want to kind of at least point out is how many of you have noticed a lot of W patterns on the chart? Has anybody noticed that lately where you're starting to see a lot of W's? Now, my question is to you, are they like double bottoms? Are they like that? Okay. Or are they kind of like tilted down bottoms, like lower lows? Okay. Or are they kind of like this, where the low there is higher than where the low was there? And if we had to answer that question collectively, I think we would have to absolutely say, James, I'm kind of seeing a lot of more tilted up W's. Now, is that a bad sign or maybe a good sign? It's probably good, because that actually means the trend reversal is just kind of more taking form. Speaking of that might be trying to get a little reversal, let's go to Amazon for just a second. Now, remember, I'm going to imagine that we don't know anything. We don't know anything outside the colors of the moving averages. Okay. Now, if we just kind of said, hey, when the moving average colors, whether it's the 20 period moving average there that I'm pointing at, or the 10 period moving average is red, this paper money account does not want to be involved. Okay. No spank you. But all of a sudden, if we can get both of the moving averages to turn back green, the paper money account hypothetically says, yes, I would like to be involved. So I'm talking about the paper money account. Now, what you're now going to notice is, when did those moving averages turn green? Now, if one person says to me, one, that's just over my head. Okay. Well, if that's over our heads, yeah, that's going to be tough. So, okay, so let me just simplify this. So when moving averages are red, the color of the moving averages are red, the investor says, I don't want to be a part of that trend. When the moving averages both, let's say, more confirmation, are green, the investor decides, I want to be in the position with position sizing and stop loss. Well, when was that? Answer, it was on March 20th, here, just a couple days ago. Now, all of a sudden, if we look at that, it kind of gets a little bit more of a turn, gets a little bit more of a turn, okay? Now, if we drew the diagonal line of resistance, and someone made a very, 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 very good point, and I saw it on X yesterday. No, it was actually a comment that was in the YouTube comments. And actually, we already have that there. Let me just share this. And I honestly, I never really thought about it this way, but I want to share it because it was a solid comment. You'll notice when we talk about show call hold dots, it does have yes. Now, if we said show the bearish bounce down version of that, we're going to go no to yes. So what's our point with this? What was the person's point of showing this? Well, a lot of times people might struggle with drawing the line of resistance. Okay, fair comment. Okay, that's why I'm bringing this up. What the person mentioned to me is what they said, James, I do is I'm going to go from one dot, which one dot started right there. There's the second dot. There's the third dot, fourth dot, fifth dot, and so on. Now, remember what we said our goal was. We're trying to say, look, can we go from dot to dot to dot to dot? And he or she that connects as many dots as possible, that's probably where the line of resistance is. Now, let me repeat this. The green dots are the hold dots. Okay, those are the bullish bounce. Those dots don't matter if the moving averages are really red per se, because you actually have kind of a negative trend. When we look at the red dots, that's the opposite version of hold, okay? And what I'm doing is I'm just drawing it from there, red dot, and then what you're going to see is red dots underneath and red dot right there. Why are we not taking it to that point? Well, because we're never going to get all of them, and there's the other red dot. So we really went through 3 red dots, okay? And we didn't quite get that fourth. Now, what's the point of this? Well, I'm going to right-click on that. We're going to say extend to the right. And this gives us the angle of resistance. I thought that was a very good comment I wanted to pass along, okay? Because what you're going to now notice is, if we follow that along, the first day, if we just did what that person talked about, using those dots, the first day it actually broke out, where we talked about that definition yesterday, that was literally the day before the moving average turned green, okay? Please, will the real person who said that please stand up? I wish I wrote the name down of who said that, but I think if you struggle with drawing diagonal support, with diagonal support, you could really draw the green dots from the green dots. If you say I struggle to really draw resistance, you could really take those red dots. Okay, great point. I'm glad you brought that up. Now, what we're going to do on Amazon, we're going to go to the trade tab. And what I'm going to do on the trade tab is, let's go to the May. Let's go a little bit farther out. Now, we know that if you said, hey, we're going to choose a long call vertical, or we said a short put vertical, one is really more a play on a higher potential profitability, typically. And the other one's getting a credit, but playing a little bit more probability. The short put vertical, how we set them up, tend to be a little bit more forgiving. That means that the stock might be able to go down a little bit and still be above break even. Okay. Now, what I'm going to do in this case is, and by the way, if you said, James, I don't have that chart, can you share this with me? Yes. Okay. Whenever we talk about scripts at all, you have to understand here that, and I just sent that out, is you should have an understanding of what it's trying to explain and can you verify. With scripts, they're not guaranteed for accuracy or timing. So you want to have an understanding what they are and verify, is it doing what you want it to do? Now, what we're going to do here is we're going to go to the trade tab. Let's say the investor said, James, I want to have a higher potential upside gain. Okay. Now we're going to choose the 200 strike. Okay. A little bit more in the money. We're going to go buy and then vertical. Okay. Buy vertical. And now what you're going to see is we're going to buy the 200 and then buy the 205. At least look at that. Well, we got a debit of 288. So if you have a right to buy at 200 and you pay 288, the break-even expiration is going to be, well, 202.88. Well, what do you notice? We're already above that. Okay. Now, maximum loss, max loss 288, which is the debit. Maximum profit, $5 spread minus the debit, $212. Now, what you're now going to see in this case is it's about 1-to-1. If you said, James, I want to stretch this up a little bit where it might have a little bit higher potential upside, 200, 210, debit there bigger, and it's going to get us a little bit closer to a more 1-to-1. Why would you choose a $5 versus a $10 wide strike? The answer really comes down to how many contracts could you do? If you said, James, when we did the 200, 205, I could only do one of those. If you could only do one of a $5 wide spread, then you probably are not going to do a $10 wide, okay, spread. That's why some people choose narrow spreads, okay? Now, if we could risk $538, which we're going to go confirm send and note that we have the cost of the trade, including commissions and fees on this paper money account. Now, what you're now going to see is the commission is really $1.30. Now, what I'm going to do in this case is we'll go ahead and send that order. And let me go back. And so you might be wondering, why is that showing and a fee? When I go back to that paper money account right there, May, bring up the 200, the 210, you're going to see that order on a paper money account, there it is, confirm send. There's not a fee there. So in the PM, the paper money account, that's what it's going to look like with the commission, okay? So notice that there's a max loss built into the trade. Now, when we talk about what delta are we looking at? Well, if we looked at buying the 200, it's the in the money strike, not at the money. It has a delta of 63, okay? So a little bit better odds of being in the money at expiration. That means on the call side that the stock has about a 63%, the stock has a 63% chance to be a penny above 200 as of right now, okay? So when we go back and look at this trade, confirm and send it. There it is, trade number 2, 200, 210, send the order, okay? Now, I want to kind of spend just a moment and kind of look at just a couple stocks that we've kind of just discussed, and we're just kind of wondering, might they bounce to the upside and or continue? Okay, so trade number 1 was Netflix. Trade number 2 was Amazon. But now if I go to, let's say, Apple, is Apple getting above a pretty significant support? What would you say? So if we take a look at this, what you're now going to notice is a significant support was probably right about there. Now, if you're someone who likes to trade horizontal breakouts, Apple's getting a little push. Now, I know what you might be thinking. Well, look, I'm bearish, okay? Look, you have to say I'm bearish, but at what point would you consider changing? At what point would you say that the bears have lost technical control? That's an important point, okay? So you could be a bear. just at what point do the bears lose control of the trend? Apple getting above, let's say, that 220-ish area. Let's also go back to Tesla. And if we take a look at Tesla, now remember we said a comment yesterday that I've never said before, that I think I need to reemphasize. Now remember we had a big candle on the 21st, a big gap to the upside yesterday. And yesterday I said sometimes when you see these red candles, an average investor, maybe a new person, might say, oh no, red candle, it's bearish. Well, first off, that's not true, okay? Second is we call that a trap. Remember, you got to put the red candle in context. Is the stock above the moving average still? Yes. Is the moving average acting like a potential support? It could be. It's still above that. And if we kind of added one more thing to this, who cares if it's a red color candle? Have we even traded down to the midpoint of that candle from yesterday? And the answer is we haven't even done that yet. So what does that tell us about trend? It's stronger than we think. The average investor, hook, line, and sinker, okay, literally is going to get scared when they see the color of the candle. Forget about the color of the candle. Look where the candle is in terms of support and resistance, okay? So sometimes we kind of read the chart based on how we want the outcome to be. That's not even true, okay? So if we look at this, we say, okay, red color candle, it's trading lower than where it opened, hasn't even gone to the S1 level, hasn't even gone to, for example, to the moving average yet. And if all of a sudden, maybe tomorrow or the next day, we turn this to another green candle, that means it was a very short and shallow pullback and investors are buying on the dip. Okay, now, last trade we're going to do, we're going to go to the trade page and we're going to go to the short put vertical. Now, if you like volatility, you might say, James, I'm going to go out to the maze here, and I'm going to go maybe look at, let's say, the Streich, okay? That maybe has as close as we can to maybe a 30-ish delta. Well, if we did the 30-ish delta, it's going to be the 250 Streich. There is nothing wrong, quickly, to say, look, I'm going to sell the put where we think the stock could stay up above, or the investor might not mind in owning the shares of stock. So remember, when we sell something, there is a pending obligation. Now, last trade, we're going to sell the 250s, obligation to buy the shares. Second, we're going to have that downside protection. Note the credit there, 325, confirm and send, and just kind of see this as we wrap up here. Credit there, 325, less the commission. So if I push this to the paper money demo account, it's not going to have that fee as we showed earlier, okay? And now what you're going to see in this case is credit less the fee, the commission, $1.30 is going to be about $323.70, okay? We can see the break even, potential maximum gain and maximum loss, okay? So we want to kind of also make sure as we wrap up here, if you said to yourself, well, James, has this been recorded? The answer is absolutely yes, okay? So it has been recorded. And so what you can actually do in this case is you can also go ahead and go to youtube.com, type in Trader Talks Schwab Coaching, and what you're now going to see is if we also bring up this page, okay, feel free to subscribe, live webcasts and virtual workshops. And once we do that, you're now going to see that coming up next, we have Getting Started with Options, Cameron May, Long Options, Brent Morse, and also the Barbara who's been on chat, Getting Started with Technical Analysis. We invite you to attend these classes to study them out and practice in paper money. Now, I'm out of my time here today, but remember with what we discussed, it was done for example and illustrative purposes only, okay? Also remember that when we talk about investing, all investing has risk with it. And also remember, as we talk about our examples here today, it was done for example and illustrative purposes only. Stay tuned for Cameron May coming up next. Thanks to Barbara. And stay tuned for Cameron as his session will be live and recorded as well. Thank you so much and take care and have a great day. Bye-bye.